The global financial landscape is undergoing a profound transformation. Quietly but steadily, economic systems, labor markets, investment models, and even the nature of money itself are evolving. This shift is not limited to one country or region. It is happening worldwide. Inflation patterns are changing, technology is reshaping commerce, demographic trends are altering retirement systems, and geopolitical dynamics are influencing markets in ways that would have seemed unimaginable just decades ago. Many people sense that something feels different, but few fully understand the scale of the change. A financial shift is happening worldwide, and the critical question is, are you ready? Today we will talk about a financial shift is happening worldwide. Are you ready? So, before we start, make sure to hit the like button and subscribe to my channel. One of the most visible aspects of this shift is inflation volatility. For years, many advanced economies experienced relatively stable and low inflation. That period created a sense of predictability. However, global supply chain disruptions, energy price fluctuations, and monetary policy changes have demonstrated how quickly inflation can re-emerge. Rising costs of housing, food, healthcare, and transportation are affecting households across continents. Inflation does more than raise prices. It erodes purchasing power and alters long-term financial planning assumptions. Interest rate cycles have also become more dynamic. Central banks worldwide adjust rates in response to inflation, employment data, and economic growth signals. When rates rise, borrowing becomes more expensive. Mortgages, auto loans, business financing, and credit card interest rates increase. When rates fall, asset prices often rise. These fluctuations influence real estate markets, bond valuations, stock market performance, and consumer behavior. Financial readiness now requires understanding how interest rate movements affect personal budgets and investment portfolios. Another major shift is demographic change. Many developed nations are experiencing aging populations and lower birth rates. This creates pressure on public retirement systems and healthcare infrastructure. Programs such as Social Security face long-term funding challenges as fewer workers support more retirees. Longevity is increasing, which means retirement periods are extending. Planning for a 30-year retirement requires different saving strategies than planning for a 15-year one. Individuals must account for both longevity risk and healthcare inflation. The nature of employment is transforming as well. Automation, artificial intelligence, remote work, and gig platforms have reshaped labor markets. Traditional lifelong careers are becoming less common. Instead, workers move between employers, freelance opportunities, and entrepreneurial ventures. Income streams are increasingly diversified but less predictable. This shift places greater responsibility on individuals to manage retirement savings, insurance coverage, and skill development. Technology has also altered the way money moves. Digital banking, online investing platforms, peer-to-peer payment systems, and algorithm-driven trading have democratized financial access. At the same time, cybersecurity risks and digital fraud have increased. Financial literacy must now include digital security awareness and an understanding of data privacy. Global interconnectedness means that economic events in one region can rapidly affect others. Supply chain disruptions in one country can influence prices worldwide. Political tensions can impact energy markets and currency valuations. Investors must now consider geopolitical diversification as part of portfolio strategy. Debt levels, both personal and governmental, have risen globally. Governments have expanded fiscal spending to support economies during crises. Individuals have relied on credit to manage rising living costs. While debt can stimulate growth in the short term, high levels of debt increase vulnerability to interest rate changes and economic downturns. Real estate markets are experiencing structural shifts as well. Urbanization patterns, remote work flexibility, and demographic changes influence housing demand. Some regions experience rapid appreciation, while others stabilize or decline. Real estate is no longer a universally predictable asset class. It requires careful market analysis. Another global shift is the transition towards sustainability and environmental responsibility. Climate change considerations are influencing corporate strategies, investment flows, and regulatory policies. Environmental, social, and governance ESG criteria are increasingly incorporated into investment decisions. This shift affects energy markets, infrastructure spending, and long-term growth sectors. Healthcare systems worldwide face mounting pressure due to aging populations and rising medical costs. Individuals must plan for higher out-of-pocket expenses and long-term care needs. Ignoring healthcare inflation can undermine even well-funded retirement plans. The rise of alternative investments is another indicator of change. Investors are exploring private equity, venture capital, digital assets, and commodities to diversify beyond traditional stocks and bonds. While these assets offer opportunity, they also introduce complexity and risk. Education costs continue to rise in many countries, placing financial strain on younger generations. Student debt burdens can delay wealth accumulation, home ownership, and retirement contributions. Financial readiness now includes early planning for education funding. Tax policies are evolving as governments adjust to economic pressures. Changes in income tax brackets, capital gains rates, and retirement account rules can significantly influence financial outcomes. Staying informed about policy changes is essential for long-term planning. Perhaps the most significant shift is psychological. Constant exposure to financial news, social media, and market volatility creates emotional stress. Investors may react impulsively to headlines. Financial readiness includes emotional discipline and long-term thinking. Emergency preparedness has become more important than ever. Economic shocks, health crises, and job disruptions can occur unexpectedly. Adequate emergency funds provide stability and prevent forced liquidation of investments during downturns. Income diversification is increasingly necessary. Relying on a single paycheck exposes households to concentrated risk. Side businesses, freelance work, dividend income, rental properties, or digital ventures add resilience. Retirement planning must also account for sequence of returns risk, the danger that early retirement market downturns permanently reduce portfolio longevity. Withdrawal strategies, asset allocation, and tax efficiency all require careful coordination. Inflation-protected investments, diversified asset classes, and periodic portfolio rebalancing are critical tools in this evolving landscape. Static financial strategies are less effective in dynamic environments. Financial education is no longer optional. Understanding inflation, interest rates, taxation, diversification, and risk management empowers individuals to adapt proactively rather than react defensively. The global financial shift is not solely about risk. It also presents opportunity. Innovation, technology, new markets, and entrepreneurial ecosystems create unprecedented pathways to wealth creation. Those who stay informed and adaptable can benefit significantly. Ultimately, readiness means flexibility. It means reviewing financial plans regularly, adjusting strategies as conditions change, and building systems rather than relying on assumptions. It means preparing for longer lifespans, higher healthcare costs, digital transformation, and economic volatility. The financial world is not collapsing, it is evolving. Those who cling to outdated assumptions may struggle. Those who adapt, diversify, and educate themselves position themselves for resilience and growth. A financial shift is happening worldwide. The question is not whether it will continue, it already is. The real question is whether your strategy reflects the new reality. If you liked this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.